Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Taylor Riggs, and we're counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovec. Welcome our audiences across Bloomberg Television, Bloomberg Radio, as well as on YouTube and Quick Take. Carol, stocks right now not far off the lows of the day.
No, exactly. They've kind of been bouncing around, but as you said, definitely well off their best levels of the session. Having a really tough time. We talked about it earlier. You did, I did, and that is the chip sector continuing to be under pressure, off its lows, but just barely, still down more than 4%. I'm thinking about NVIDIA, which is down about 4% as well. Micron was the one that weighed on the market, talking about maybe some weakness for 2023. NVIDIA will report, Tim, after the close. Let's see whether or not it's a pig pile on in terms of bad sentiment or whether they can help turn things around.
Yeah, definitely a shift from what we saw last week. And speaking of last week, we are up 10% on the S&P 500 from our lows in October, Taylor. But Emily Hill, the founding partner at Bowersock Capital Partners, says proceed with caution. She says this is a bear market redo of what we saw back in July, where essentially investors are looking for any sort of signal from the Fed that can lead to optimism. Kind of what we saw post, what we saw over the summer when Jay Powell had to come out and kind of squash the rally.
I'm just glad you didn't call it a dead cat bounce, because then I'd have to go to Romaine and rename it a dead dog bounce, and he doesn't like me.
Why do we have to use pets with these terms?
Stay away from our puppies.
Thank you.
You're
Thank you, Carol.
You're
Wow,
welcome.
solidarity with
But Taylor and I are both cat people.
And we're both Cowley people, Tim.
There we go. We got to stick
Okay.
together.
All right, well, that explains a lot. Let's see if we can explain the markets here with the Dow Jones Industrial Average lower by roughly 30 points. We're waiting for these numbers to settle, but the Dow had been oscillating between gains and losses. It had been one of the few bright spots trying to hold into the green, but it looks like it's going to finish the day in the red, down by roughly 0.1%. The S&P 500 going to finish lower by about 0.8%, right around that 39.59 level here. So there's been a relatively tight trading range right now for the S&P over the last few days, where it's really tested that resistance at the top and the support below it here. Hasn't really been able to break through either to the upside or the down. NASDAQ Composite down 175 points or 1.5%, Carol, and the Russell 2000 going to finish the day lower by 1.9%.
You know, Romaine, I'm always scratching my head when we've got kind of a day where we're bouncing around a bit in terms of the trade, and then you've got the VIX actually heading lower. It just never makes sense to me. Right now, the VIX settling in at 24.20, Taylor.
Yeah, well said, Carol. Take a look at where we are underneath the surface, sort of 2 levels underneath that headline index. Things don't actually look that bad. There's still a lot of sectors in the green under some of those, quote, best performers, but it's defensive, Carol, and that's really where that trade comes in. Utilities, insurance, food and beverage, household products, food and staples. Does that sound like a theme? Does that sound familiar? Those are all up 0.3 to almost 1% on the day. There were still a lot of losers, though, when you think about some of the worst performers on the day, and that's where it really does look like that classic risk-off trade. Transportation, energy, auto components, and semiconductors. And Carol, those are off anywhere from 2 to 4% on the session.
All right, let me get to some of the gainers here. I was kind of all in on retail because they were certainly some of the standouts in today's session, finishing off their best levels, but nonetheless lows, eking out about a 3%, not eking out, certainly all in, a 3% gain in today's session. And that was good enough for making it top in the S&P 500, among the top. They raised their profit forecast for the year. Comp sales forecast a little bit less optimistic than its quarterly last report. But key, and we talked about this earlier, it's kind of individual homeowners, do-it-yourselfers. They were out there shopping in a big way. TJX, home-to-home goods, Marshalls, and TJ Maxx, it was up 5.2% in today's session. Again, among the top gainers in the S&P 500, better than expected comp sales at TJ Maxx and Marshalls in particular, which the company said were driven by strong apparent sales. Company continuing to expect to repurchase roughly 2.25 to 2.5 billion of TJX stock in fiscal 2023. I always think that's important to point out. And then another one, Discover Financial, it was up about 2.4%. This after the company came out and said the investigation into its student loan servicing practices had been completed, and it will therefore resume buybacks under the existing program of up to $4.2 billion. Keep in mind, this this company has faced a fair amount of regulatory scrutiny for its student loan business for several years, but nonetheless, investors, Tim, moving into this name today.
Okay, I'll get to my decliners in a second, but in the meantime, some breaking news when it comes to crypto. FTX saying that Sam Bankman-Fried has, quote, no ongoing role at the company. The company, FTX, saying that in a tweet. The company also saying that SBF does not speak on behalf of FTX, FTX US, or Alameda. Those are all affiliates of the parent company of FTX, of course. If you spent any time on Twitter or following the story over the last week or so, Sam Bankman-Fried has also been spending a lot of time tweeting. And you can imagine that people who are handling the bankruptcy are probably not happy about that.
Yeah, because I was wondering if that's what they're referring to, the multiple tweet storms that he seems to be going
24 is the latest, right?
Explaining, of course, his take on things, and more importantly, I guess, FTX's take, and FTX basically saying he has no take.
All right, let's get to some of the decliners. Carol, you talked a little bit about some of the gainers when it comes to retail. Target not looking so good when it comes to today's move, down more than 13% on the day. We've been talking about the story all day, but pretty disastrous earnings report. The company warning that shoppers are pulling back, and Brian Cornell saying that guests' shopping behavior has increasingly been impacted by inflation, rising rates, and economic uncertainty. Advance Auto Parts down 15% today. The company missed estimates for EPS after the bell yesterday. Did CBS cut its recommendation to neutral from buy earlier today. And I'm also keeping an eye on Amazon. It did underperform both the NASDAQ and S&P 500. The company is beginning its largest round of layoffs in its history. Bloomberg is reporting that they're looking to cut about 10,000 jobs. The company does employ more than 1 million people. Many of those people, though, are, of course, working in those warehouses.
And just quickly, two other decliners that I want to put on there. We were talking about this a little bit earlier on Bloomberg Television. D-Local closing lower by 51% on the day. And Zoom Info, not Zoom, but Zoom Info Technologies, finishing out at 14% lower.
ZI, different ticker. Romaine, you're always so smart to remind us of that. When in doubt, full faith and credit. Here we go. 2 days in a row now, a significant bid into full faith and credit. Bond price higher, yield lower. And Carol, what really catches my eye is, again, the focus on that front end of the yield curve where yields are rising. But further out, you're actually seeing a flight back into quality and a flight back into bonds. You had a very strong 20-year bond auction today, maybe a little bit of a bellwether of the strength and the demand of this sector underway. But really, it comes back to, is 4% attractive, and where do you think yields are going with this Federal Reserve on the move?
Well, and what's really interesting is I do feel like there are conversations. We just talked with the CEO and founder of Shippo, and they were talking too about concerns about a recession in 2023. I feel like there's negative momentum. Cisco's out. Yeah,
Cisco earnings are crossing the wire right now. Shares higher in the aftermarket here. Here's their numbers here. They're looking at services revenue $3.39 billion. The street was looking for $3.45 billion. Fiscal first quarter adjusted EPS is coming in at 86 cents a share. The street was looking for 84 cents, and that's on the back of revenue of about 13.68. The guidance going forward, Taylor, for the fiscal second quarter, they're looking at EPS of 84 to 86, right around what the street was looking for. And as far as their revenue, full year revenue forecast, 4.5 to 6.5% growth. That is a slight nudge higher than what they had put out before, which is 4 to 6%, and the street was looking for 5.1, so 4.5 to 6.5% growth for the next fiscal year.
And we hear from Chuck Robbins, Chair, CEO of Cisco, saying the fiscal 23 off to a good start. They're talking about the largest quarterly revenue and second highest quarterly non-GAAP earnings per share in our histories. They're talking about the relevance of their strategy, their differentiated innovation, and their position to help customers. They're talking a lot about the strong results in the first quarter, continuing to make progress on that business transformation. That is the CFO of Cisco who is saying that, and talking again about the annualized recurring revenue increasing now to more than $23 billion. That is up 12%.
All right, well, different story happening with Sonos, the company reporting its latest results. 2023 revenue forecast beating estimates. It still is higher in after hours, just by about 1%. We're actually going to be speaking with Patrick Spence, the company's CEO, on our program tomorrow as we continue to dig into these reports.
I want to go back to Cisco. I mean, this is a massive player, right? Those big networks and certainly institutional, or I should say, big clients, in terms of who are buying it. So to see this name up 5% in the after hours, I mean, tech spending spending. We know it's where, right, Romaine, where companies spend, but they're upping their outlook. That fiscal year revenue, 4.5% to 6.5%. They had seen 4 to 6. Estimate out there is 5.1. This is pretty significant. And they did talk about kind of an easing supply situation, too, in that release.
And it's significant given the breadth of Cisco. I'm sure you already know this, Carol, but we talk about, the software that they sell for conferencing and networking. Of course, all the security products that they sell as well. Of course, they're in chips, they're in routers, they're in all this sort of Wi-Fi management space. So they cover a huge swath of the tech industry, both with regards to what companies spend on, but also in terms of what we ultimately spend on. Even though we may not be paying it directly to Cisco, we do indirectly.
Exactly.
We are hearing from Robinhood as well, reporting their monthly numbers here for October. Talking a lot, Carol, about the end of October monthly active users, about 12.5 million, net cumulative funded accounts, 22.9 million. That's up about 30,000 year over year. And again, you're up a little bit in terms of September to October for those monthly numbers. But again, just a monthly operating data that they're coming out with.
Yeah, Robinhood, though, down 47% so far this year, but a little bit of movement in the after hours. All right, guys, some earnings here on this Wednesday, but that's a wrap for our cross-platform coverage. Radio, TV, YouTube, and on Bloomberg Quick Take Beyond the Bell. We will see you again, same time, same place tomorrow.